Hello and welcome to Virtual Investor Conferences. My name is Eric May, and on behalf of OTC Markets, as well as our co-hosts Alpha Transform Holdings and Blockchain Wire, we are very pleased you have joined us for our next live presentation from Montis Group. Please note, you can submit questions for the presenter in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Martin Watkins, Chief Executive Officer of Montis Group. Welcome, Martin.
Thank you very much, Eric. Real pleasure to be here today. And I'm, as you say, Chief Executive of Montis, and what I'm looking to present today is what is the missing piece of financial market infrastructure, and that is for native digital securities, and that is a digital CSD. So I'm going to walk you through on that. And I'm pleased to say that joining me on the call today, but as my moderator of the questions, I thought with a bit of humor, we'd have our Chief Compliance Officer actually hearing what I say and seeing the questions we're going to be asked. Mark Boskets, our Chief Compliance Officer based in Luxembourg, formerly with a major infrastructure player of Clearstream and Deutsche Börse, and started and cut his teeth at JP Morgan. I, for my side, came from a technology background in Capgemini and then have worked for some of the biggest CSDs, infrastructure players in the world, before then becoming Ernst & Young's EMEA lead for market infrastructure. So we've been starting this journey for 3 years. I'll tell you more about that in a minute, but thank you for joining me on this, Mark, and I'll come to you at the end for Q&A as we go through. So first, I thought, just as a precursor to telling you, explaining what a CSD is all about and why it's important, I'd look at the addressable market. Now, capital markets already are, on a global basis, are an enormous size in terms of the value, the types of instruments. You can have equities, bonds, you can have different funds, and that's before we even look at derivative markets and so on. But when you then look at the addressable market for tokens, it actually dwarfs that market, because not only have you got the existing capital markets out there and you can tokenize the vast majority of it, but you then start getting into real world assets, you start getting into real estate, you start getting into art, start getting into a whole range of new instruments which can be tokenized. So the opportunity that sits in front of us is a quite incredible opportunity to tokenize the existing markets. But ironically, and this is where Montis is different, we're also supporting the conventional, because it's no good having people holding something on a digital format, a digital token in one world, and then the conventional original instrument, they've got securities and so on, they've got to hold something completely different. That's a crazy world to have. So the differentiation we've got is we've been designing systems and capability to actually combine the two and handle the two as if they coexist. They sit in your wallet, they sit in your pocket, they're your assets. So that's what we're going on to talk about here. So I thought I'd start by just saying, why Montis? And that starts with looking at what is this missing piece of market infrastructure and what is a CSD? It's a central securities depository that we believe in the future, you can forget the word central, but it is, at the moment, a central securities depository. And it's a utility, a financial utility. It enables assets, bonds, equities, funds, and so on, to be bought and sold on your exchanges, New York Stock Exchange, London Stock Exchange, Deutsche Börse, Hong Kong, and so on, and to be settled. Because what a CSD does is we transfer the legal ownership of those assets and the ownership of the cash. Sounds really simple until we get it into a very high volume and highly complex cross-border type market, but we still simplified that. So the three things we do as a CSD to transfer the ownership is we give legal certainty to the investors, the brokers, the custodians. And we do that because CSDs operate a securities settlement system. And this is, under law, the part that legally transfers. You either own the asset now or you've owned the cash and you no longer own the asset. So that's a legal certainty that we give. Absolutely critical. If you could imagine any trade you want to do, you want to know that you own it, and you want to know the instant you own it or that you've got the cash. Two other bits that go with it. One is notary services, and that's all around the integrity of issuance. if somebody issues a bond or ETFs and so on, you need to know that there's 100,000 units or 100 million units in existence, not more, not less. And we actually monitor that and always ensure that the investor knows, the issuer knows exactly how many are in existence and who the legal owner is of those instruments. So really important that side. And the other side, corporate action, servicing, we look at things like distributing benefits, about voting rights and so on. So actually the life cycle of the instrument. And moving on to the next piece, that's what a CSD is. And who are we? Well, we're a 3-year-old startup. We're going through our seed round funding at the moment. We're based both in London and Luxembourg as a team. We're former, or we are still, technology innovators, and we're infrastructure practitioners. So we've done it, and we've worked with the innovative technology that goes with it, and we've put our reputations on the line because we truly believe that everything is going on chain, that the tokenization of financial markets is on its way and it's happening in scale and it's accelerating as it does. So as a management team, we know what the incumbent CSDs, what the issues are. We know, and we've worked the markets and we've helped run the markets to understand what the problems are. But the markets themselves have to exist as they are. And there's a lot of frustration that the incumbents are not transforming to a digital world quick enough. And in fact, it's in their interest, in part, to slow it down. So that's why we've built Montis CSDs. We've applied for our licenses in Luxembourg, and I'll explain why in a moment. And we believe that with the increasing amount of demand that's coming from financial institutions towards tokenization, that we're ahead of the curve. We've got our applications in, we've designed digital services for a digital world, whereas the incumbents are sitting in an analog environment. And we've built our DLT base, so it's blockchain based minimum viable product. We're ready to go, and we're pushing for our regulatory authorization, which we expect to get by the summer or even just before. Wanting just to confirm then to everyone's understanding, you've got the buy side, that's your asset managers, that's your fund managers, your pensions and pension funds and so on, all you as investors. And the sell side are the brokers and so on. And also on that side, you have your custodian looking after your customer. For us, that's the world of where the demand, the buy and sell comes from. But we look at the fact that issuers want to raise money, and that's why they originate. They originate bonds, they originate equities, and so on. Those need to be listed on a exchange or on a multilateral trading facility or any other trading venue. They need to be listed on a venue. And the rules are that to be issued onto a secondary market, onto a venue like an exchange, you have to be issued onto a CSD, because that's where we come in and provide the protection from insolvency. We also give the integrity of issuance and the finality of the trade. So we sit there, get the trades through from the trading venues, and also can take it OTC from a buyer and a seller directly as well. But the big difference for us is we do it for the analog world. And the key bit is we can handle natively digital issuance. We can have non-native, that's a security that existed, which we now tokenize. And we can also handle the conventional securities. And we're starting with bonds, UCITS, SICAVs, ETFs, equities, structured products, and then we expand further in due course into private equity and real estate and so on. And we're doing that in central bank money first, and we're doing it second in commercial bank money and wholesale CBDC and stablecoins. So just to move through, the problem we're solving is that the incumbents can't provide the ability for you to buy and sell your tokenized security and hold it together with the existing stocks or bonds you've already got. Really important you put the two together, because then you can leverage them. We also are doing it in a far more cost-effective and speedy manner, and giving you the immediacy of knowing what you own and what you don't own. And one of the examples of why there is a problem for incumbents, we recently had a supranational bank do a digital bond, which the incumbent put onto a blockchain, immobilized, that means they froze it, and then from there, they had to put it all back onto the analog systems to process. That's not the way that we're going to get this adopted. Our plans for this year, to get authorized and go live in Luxembourg during the first half of this year, around summertime. Launch applications both in UK and Asia Pacific during this year. The UK one, I'm meeting the Bank of England on Monday. We've got a Series A that we're planning for a couple of months' time, or just over a month's time, which is a 25 million raise. And we're focusing on work we've already got engagement with, and we've been doing for 4 months now with Global Asset Manager and their broker and so on around tokenizing their funds and tokenizing their bonds. And we're also working with a number of the global custodians, delivering on their numbers with their volumes and their values, 45% savings on some of their key areas of post-trade cost. And that gets passed through to the investors as well. So where's the demand coming from? I think the names speak for themselves, but BlackRock's ETF launching a blockchain, a Bitcoin ETF. Fidelity have been out there actually looking at tokenizing funds and so on. HSBC came in with the Hong Kong green bond. There's a lot of it going on out there at the moment, and it's accelerating. Our differentiation starts in Luxembourg. And the key bit here is we've got global ambitions, but we're leveraging the laws and the regulatory certainty that already exists. In Luxembourg, we can serve the whole of the European Union, that's all 27 countries, from one location, and we are permitted to put digital securities, which are financial instruments, which your existing financial institutions can hold for you, and we can service those and have those recorded on our blockchain. We can transfer them. We can have immutable records. We can have the certainty. Because they're tokenized, you can have fractionalization. You can get the additional benefits of both, right through to the point of everything except the cash on chain. The cash at the moment is central bank money, really high grade money, but the reality behind it is we're already preparing for serving cash on chain as well. So we've started in Luxembourg because that's where the regulations are strongest. The UK has just opened up a similar approach, so that's why we're meeting with the Bank of England. And we're looking at the third expansion during this year into Asia Pacific, which will either be Hong Kong or Singapore. In terms of the use cases and the market that we're working with, we've got 7 use cases we're working on. The 2 we're majoring is the tokenization of bonds and funds, and also the tokenization of structured products. And the structured products where we can identify 45% saving for the banks. Tokenized bonds, similar types of savings. Haven't quite got all the detail on that at the moment, but it's the same similar order of magnitude. In terms of what we built a blockchain-based CSD. It's production ready, and it already connects trading platforms with the custodians, where the institutional investors and also the retail investors can actually have no change in what they do. It's business as usual for them. They connect to the custodians or to their brokers in the same way. So we're minimizing the impact initially, but we're also giving them the opportunity later on this year to be able to have direct participation onto Montis, to have their own wallets directly onto the Montis chain. We support the issuer paying agents and the issuers, and then we're bringing on board the transfer agencies. And this is on a Montis private chain. We validate all the transactions, and we do that explicitly because the law requires that you have to have certainty around what law would be impacted if there was a conflict, if there was a challenge around any trade we settle. And so we do that, which means that we're guarantee for anyone trading and settling through Montis, we know what law applies, and we know that we've got legal certainty for any court action, any jurisdiction, any judgment has got that absolute certainty behind it. But we still already have connectivity out to Ethereum, to Algorand and Hedera. So if you want to hold your securities tokens in a wallet there, we can do it already today. We've got access also to Corda, DC, Delta Capita, that is, Tezos, Hyperledger Bezu, Hyperledger Fabric, Daml, can all be refreshed and available as additional connectivity. And we're looking simultaneously now at working with some of the banks. You've seen that JP Morgan have got Onyx, HSBC's got Orion. These are logical places for us also to look to connect. In terms of the team that's sitting behind us, we've got a very strong management team who come from the industry but have spent 5 or 6 of the last years actually disrupting that market and building innovative technology-based differentiation to financial markets and digitizing the markets. We were founded and created by our parent company, Archax. Archax was the FCA, the UK's first ever trading venue, MTF, broker and custodian for small, medium-sized markets. They still own 72% of us, and we've then augmented that with our own in-house team within Montis, and we've outsourced certain services like internal audit, finance, and so on. So very strong management team and executive team for delivering the services. Interestingly enough, we've got 16 names here. We've actually now got a 17th from a very large investment firm in Luxembourg. We've got some of the leading people from the market giving their time, effort, and energy to help us through this journey. So we're very confident, and these are the people I reach out to in terms of the focus for where we go, what we're thinking about, and so on. And I see there's a question already come up around transfer agents and so on the tokenization. It's an interesting one. I had breakfast this morning, or a cup of coffee this morning, with one of the biggest transfer agencies in Europe, and they were saying they can see the changes that are coming, and what they wanted to talk to me about was actually how can our ledger and their ledger actually be the same ledger, and we're looking at the legalities as well as the technical changes there, because we focus on the legal owner, they focus on the ultimate beneficial owner, and there's a close proximity between the two. So it's really a question of they are actually embracing it, and they're seeing how that can be embraced and brought on in terms of getting the right market adoption for their changing marketplace. So I just wanted to pick that one up as I come through. Sorry, Mark, I've taken that one off you. In terms of our strategy, really, really clear. Number one, regulated first mover advantage. Where the laws allow it to be done, in an authentic way at scale. That's where we've started. Luxembourg first, UK, Asia Pacific. Asia Pacific, we're still working out, because it really ought to be both Hong Kong and Singapore, but we're working out which one first because we're looking the scale game. Number two, the size of the market. We're focusing on those parts which are the biggest first. So we do see needs in private markets and so on, but we're going with bonds and funds, and in due course we'll put equities, but we're going structured products. You know, people who issue 5,000 structured products a day, and we can deliver 50% saving, 45% saving for them. And we're bridging the gap between TradFi and DeFi because we're actually working in how to have tokenized digital services operating on blockchain at the same time supporting conventional business. Our technology is certainly at the leading edge in terms of it's the most advanced yet acceptable in the industry. And we're agnostic as to which external blockchains we need to connect to. This is about a connectivity and a demand game. If it comes onto a particular blockchain, we need to connect to it. If there's no demand on another one, we don't need connectivity. So I'm going to move through a little bit more in terms of our future vision. You can draw it up whichever way. There is a key role for a CSD, but you can take the C away. We are the securities depository. We are transferring ownership. We are giving that legal certainty. But we're starting with financial markets, and then naturally you could see in due course, you could have a non-financial market settlement securities depository. So that's how we see things developing. In terms of move up a level, we actually get to a point whereby we have a single ledger, which is the Montis ledger, sitting there, and it detects if JP Morgan has been using Onyx and someone else, HSBC has been using Orion, or Citi have used Polygon or whatever else. We detect the state change, and that simply updates our record. You no longer have the batch systems. You no longer have to send information out. We detect the state change. We change the ownership. And that's the world we see it moving to. The technical capability and financial capability is there to do it, and the innovation. Probably take the law and the regulators and so on, I would say 5, 6, 7 years to be comfortable with us operating in that way, but we can already do it. The investment opportunity. Before we go to the Series A, We're just closing off a $3 million equity round. We only started it a few weeks ago. We've got 2 million already pledged. We've got 1 million remaining. And this helps us accelerate and push faster in each of the different areas. One, jurisdiction. Secondly, services. We're launching 2 more businesses in due course in Luxembourg, one around structured products, one around settlement optimization across equities, and also I want to get some more staff on board because the demands being placed on us are absolutely superb. We just want to maximize as soon as we can. That takes us, as you can see, from the left-hand side, as we are today. Just with the equity raise, we get ourselves to the right-hand side. And from there, we put the Series A in, which is where you see that our parent company shareholding would potentially, and it's expected to, dip below 50%, because they want us to be out there in the market serving everyone. And finally, in terms of the value creation we're looking at here, we're aiming by the end of this year, and it may have to be the first quarter next year, but let's say by the end of this year, we're aiming for 100 million valuation for the company. At that point, I'll thank you all very much. It's been wonderful to walk you through this at speed, but I'm now going to ask my Chief Compliance Officer and moderator for the day, Mark Bosquet. Mark, please, any questions out there?
Yes, Martin, thank you. You did kind of answer to the first question, but there was a next question, and that's the following. What are the catalysts and timeline for exchange and financial institutions to embrace your approach?
Well, that's an interesting one. So in effect, what's going to lead adoption? Well, the starting point is actually demand coming from both investors and the buy side. And that's one of the reasons that we've focused on having very close and strong relationships with some of the largest or global asset managers in the world. We have one particular 9-month engagement where we're 4 months through it already. It started at the beginning of January. And that is having completed the business case for tokenizing bonds and funds. We're now going through the mitigation of the operational, the risk, and the legal implications of what we're doing. And then the third quarter is actually the intention to have those instruments issued directly onto Montis and bought and held in custody by their global custodians. Now, more of that comes on because you have to build that ecosystem. So custodians have brought on board their sub-custodians. Mark, you and I on Monday are in Paris meeting one of the biggest broker and custodian firms. And this morning was meeting with one of the biggest transfer agencies. That ecosystem is building up because they're seeing the instruments coming on board. You've only got to look at what the Bank of England's looking to do with gilts, to have the digital gilts. The aspirations to have some of the biggest government debt instruments out there in digital format, added to which we're working with particular ETF issuers around how to enable them to offer issue and redemption as close to 24/7 as the payment rails will allow us to do. And on that basis, that really gets us to the point whereby you could do an issue and redemption of ETFs, and you see that there's demand coming in either from Asia Pacific, so that the market maker or the AP can actually request that there's further issuances of ETFs. We can meet that demand, or we can redeem them if it goes the other way. And that was actually part of the conversation this morning with the transfer agent as well. So we're pushing on that side. And I'd say really to the question of what are the catalysts? The catalysts come from the demand that people actually want now to invest and benefit from the tokenization. And we're putting in place, the second part of the catalyst is we're putting the infrastructure in place to enable it to happen at scale. If you think about those structured products discussions that we've been having, Mark, one bank, 5,000 instruments issued per day of a structured product at scale. And that's only one, and that's only in one market, in one of the European markets. You put that across the 27 countries and put it across the 10 major banks that operate in that market. That's enormous. That's scale where it's coming. So I guess the catalyst is actually we, together with the Swiss Stock Exchange, are making it happen. They've already launched their SDX product. We're making it happen, and we're making it possible for us in the whole of the European Union. And then we go beyond.
Thank you, Martin. Can I suggest go for the next question? It's an interesting one. Can you walk through again what is going live application in Luxembourg in 2024?
Absolutely, be a pleasure. So we're going first, and this is what is going live. So we're going with a full CSD authorization. Product-wise, we're starting with bonds and we're starting with funds. So by the summer, we already have the capability to support fixed interest, corporate bonds, operating issued onto Montis and bought and sold as digital, so it's natively digital, where the actual security is the record, the block on our blockchain. Similarly, we're also supporting conventional bonds, and that can be a conventional bond which comes to us and we're still recording it on the blockchain, but the conventional bond doesn't get tokenized. So we're supporting both of those. We're adding in funds, which are money market funds. We're also exploring in this next couple of months money market instruments where we could put the whole of the corporate action life cycle in place and have the full cradle to grave of that financial instrument in a smart contract which is issued onto Montis and then is traded on external on stock exchanges, sorry, on exchanges, and we settle them, and that's throughout the entire life. So I think that gives a flavour. ETF issuance is the other one that we're expecting before the end of the year, together with, subject to closing that last bit of funding, we'll have all of the different classifications of bonds right up to asset-backed to mortgage-backed that we'll be able to support by the end of this year. Sounds ambitious, but the beauty is we've already got the libraries of the different instruments already set up to be built for us. Back to you, Mark.
With all that in mind, Martin, I would like to suggest the next question. This is when do you see revenues coming in and how much?
Okay, let's start with the structured products. Well, first of all, during this year, second half of this year, there will be revenues coming in, for example, from the initial bonds during the third quarter and from the introduction of the investment funds and the ETFs. So there will be revenue, but we don't expect 2024 revenue to be large. Some of those issuances could be large in value. So you could be talking something which is in the tens of millions, even in the hundreds of millions potentially as an instrument. But in terms of revenue to Montis, no, that would be relatively small. But where the first big step up in the revenues coming in is on the structured products, which is within 12 months of now. And that's coming in, and that's going to be in the order for each major bank that is actually issuing those products. We're going to be looking at something in the region of half to 1.5 million revenue into Montis from each. So I'd say you're looking back into this year somewhere, in first half of next year, somewhere in the region of a run rate of about 10 million sterling. So, sorry, euros, it should be 10 million euros. Now, you then put that into mapping it against our business plan. That's actually slightly higher than we were expecting. So we could modify that slightly, but that's the order of magnitude for next year, or for the first half of
So
next year.
when will you break even with that in mind?
With that in mind, if you take the full from the day that we started Montis, when we were incorporated and so on, that means depending on a bullish market, 2026, depending on a bear market, and we've gone very much with a bear market in our project, 2027, for break even of all the investment. If you want to talk about the break even of us becoming profitable as a company, then you're actually talking the profitability will be end of 25, 26, beginning of 26 for the bull, and the end of 26, beginning of 27 for the bear.
Okay. Conscious of time, we have 30 seconds left. What will
Okay.
be the valuation of Montis for the Series A?
I can't tell you at the moment, but we are looking at something which is in the 70 to 100 million type range. If we actually, and it's a broad window. As a board, we haven't met to formally discuss what that amount will be. which is because we're closing off this current round at the moment. But we are putting a number of initiatives in place which are highly accretive to our business. And we also, at the time that we come up with the Series A, we will have a completed file, a clean file from the regulator, which allows us to then say, right, okay, people are investing relatively risk-free. All the major risks will have been removed at that stage.
Thank you, Martin. We are running over time, so Louis,
I think
one more. Yeah.
I think actually, given where we are and in consideration of all the people who are listening, I'm very happy to take the questions afterwards and then reply directly, which would be brilliant. Let's just say digital transformation of markets needed market infrastructure. We've built the infrastructure. We're right on the cusp. In the next month or two, we will get that regulatory authorization that allows us to go live. And at that point, we can then start helping to accelerate how digital assets are available for the investors, whether they're retail or institutional, to be able to benefit from tokenization. Mark, with a great thank you to everyone who's tuned in, and to OTC, and also to Alpha Transform. This is a super event, and we look forward to hearing from you soon.